Greetings from Tokyo. Thank you for your joining ADBI Featured Speaker Webinar. Today, we are delighted to welcome Bangko Sentral Pilipinas Governor Benjamin E. Diokno. This is Kaori Hitomi from the ADBI Outreach team. Before we start the webinar, please let me briefly explain the house rule. During this webinar, audience camera and audio are set as off. If you wish to ask questions, please type your questions in the Q&A window below, and presenters will try to answer them during the Q&A session. Upon your attendance to the webinar, we understand you gave your consent on these terms as written here. Please note that the views presented during the webinar do not necessarily reflect the views or policies of the ADBI. ADBI does not guarantee the accuracy of the data included in the presentations and accepts no responsibility for any consequences of their use. Terminology used may not necessarily be consistent with ADBI official terms. Now, please let me begin by introducing the moderator for today's session, ADBI Dean Tetsushi Sonobe. Dean Sonobe is the Dean and CEO of ADBI. He has more than 20 years experience analyzing the role of human capital, institutions, and management in industrial development in Asia and other regions. He obtained his Ph.D. from Yale University and BA from the University of Tokyo. His research interests include empirics of economic development, particularly industrial development processes and poverty reduction in developing countries. Dean Sonobe, floor is all yours.
Thank you, Kaori-san, for a very detailed introduction. Hello, everyone. Greetings from Tokyo. It's a nice sunny day here, and the typhoon is gone from the Philippines. So although the pandemic is lingering, we can still enjoy happy moments. Today, we are very happy, especially with this opportunity for a dialogue with His Excellency, Dr. Benjamin Diokno, the governor of Bangko Sentral Pilipinas. He was appointed the governor in March 2019 after serving as the Secretary of Budget and Management of the Philippines from 2016 to 2019 and from 1998 to 2001, among other important positions. He holds a Ph.D. in economics from Syracuse University, and MA in political economy from Johns Hopkins University, and BA in public management from the University of the Philippines. Governor Diokno, welcome to ADBI Featured Speaker Webinar.
Thanks for having me, Dean Sonobe.
Thank you very much.
Morning.
Good morning. Good afternoon, everyone.
Good afternoon.
Good afternoon. Just good afternoon here in Tokyo. So to start the dialogue, let me ask this question. When you became governor of the central bank, what were the challenges you faced, and what goals did you set for your term, and why?
Well, as you stated in the introduction, I am basically a fiscal guy. I've been Secretary of Budget and Management under 3 presidents. And so when I came in as central bank governor, we were faced with elevated inflation. I think inflation at that time was about 6.2%. And that's way above our inflation target of 2 to 4%, because we are in inflation targeting mode. And so that was the first challenge. And luckily, my predecessor raised the policy rate to 4.75%. And with accompanying executive action of a rice tariffication, we passed a law reducing liberalizing the rice industry, we were able to cut inflation rate to the following year, my first year in office, to about 2.6% average. So from the peak of 6.2 to 2.6. So that was the first challenge. But when I came in, I noticed that our reserve requirement was 18%. That was too high. And so I pledged that before the end of my term, which is 2023, we will reduce it to single digit. So now the reserve requirement is 12%, from 18 to 12. So I'm on my way there. But I was also committed to reduce the Philippine economy, Philippine society, from a cash-heavy society to a cash-light society. Because at the time, cashless society is becoming very popular. And I said, for example, I plan to have 50% or half of all financial transactions should be in digital form by 2023. And that as part of our financial inclusion commitment, that 70% of Filipino adults should have a financial account by 2023. So those were my objectives when I came in.
So then the COVID-19 came, so 1 year after you're assuming the position. And then how the COVID-19 impacted your journey towards the goals?
Actually, the COVID, the pandemic, was a catalyst for further digitalization. It enhanced the use of digitalization because there's a restriction on face-to-face contact. So there was a significant increase in our own financial. We have before the pandemic, we have our own retail electronic payment system, and if you compare the March 2021 number with the March 2020 number, that was the first time that we imposed lockdowns in the Philippines. There has been a quadrupling of the use of the digital platform in the Philippines. So it helped us push our digitalization effort.
So please talk a little more about the initiatives the BSP is facilitating to enable the new economy, including digitalization of services and the national ID system.
Yes, there were many initiatives done by the BSP along the digitalization journey. First, I mentioned earlier, we have the National Retail Payment System. That was before the pandemic. And also before the pandemic, we were committed to have our national ID system. You know, this national ID system is 25 years in the making. It started under President Ramos. And there were opposition to it on the basis of privacy issues. And so it took us quite a while before the law was passed. And so finally, the law was passed. And I was still with the cabinet of President Duterte at that time, serving as Secretary of Budget and Management. And I said that I think the fastest way to complete or to support the rollout of the Philippine ID system is if you allow the central bank to print the ID. Because here in the Philippines, if you bid out the job of printing the ID, usually the losing bidders will sue the winning bidders, and it will take forever before you can have this done. So I said, since central bank is government to government arrangement, there will be no question. And so that's how it came about, that the BSP now is supporting the Philippine ID system by actually printing it. And but little did I know when I proposed that to the president that I will be transferring to the BSP. So luckily that was now the arrangement, and we're committed to print the national ID, the ID this year. Around 50 to 70 million IDs will be printed this year. And that will be very useful because of the KYC requirement, the know your client requirement. In the Philippines, you have to produce an ID to be to open an account, and many people don't have an ID. Now, with this national ID, that is a sufficient requirement for opening a bank account. And so we also have, of course, now we have what is called digital banking. We just approved last March the first digital bank in the Philippines. It is an overseas Filipino bank, a subsidiary of the state-owned Land Bank of the Philippines. And this will be very helpful for our 10 million overseas Filipino workers, okay? So, and right now we are also looking into many applications for digital banking. We'll probably have 5. We initially said we'll be open to having 5 digital banks in the Philippines. So the first one has been approved already. And we are at the moment reviewing the application of many applications. We also have adopted a QR code system for payments. In November 2019, even before the pandemic, the QR PH was launched. It's going to make possible the person-to-person transfer of funds using QR codes. Now, we intend to implement this fully in July of this year, and that pilot will be done this month and for the next 3 months. So again, this will help the small vendors, market vendors, tricycle drivers, jeepney drivers, the variety store owners, etc., the unbanked and the unbanked vendors, sectors. It will also help those who are unbanked, basically consumers who don't have bank accounts, and they do not see any need to have a formal bank account. So with this program, it will empower small economic agents to take part in the digital payments ecosystem. So these are some of the things that we have done to push forward our digitalization journey.
I see. So we economists were taught at school that whenever we talk about something that increases efficiency, then we have to pay attention to income distribution, equality, and those things. So it's very nice to hear that digitalization efforts are also helping those small vendors and drivers. But today, the policy makers across the world are talking about inclusive recovery. So they are very much emphasizing the inclusive inclusion. And then often they use the phrase building back better too. So what do you think make the recovery inclusive? So please explain more about the role of BSP about this inclusion.
The Duterte administration, even before the pandemic, was really committed to not only growing on a sustainable basis at say 6 to 7%, but also it was also committed to reduce income, the incidence of poverty from 25% to 14% from 2016 to 2022. So within a period of 6 years, the intention was not only to grow, but also to reduce income poverty and reduce poverty. And we were almost there because in 2018, the poverty incidence was already down to 16, from 25 to 16. And of course, the pandemic got in the way. And so there are some questions whether we will still accomplish our objective of reducing poverty to 14% by 2022. But I asked the Secretary of Planning, and he is confident that it's still doable. It's still doable from 16 to 14. Now, one thing that we've done in the Philippines is that we did not allow the pandemic to take away our focus on structural reforms. We've been doing a lot of reforms even before the pandemic. For example, we passed the tax reform program, which has been very useful now because we're able to raise lots of enough revenues to sustain us given the new crisis. So we continue to work on some of the reforms. And that's on the expenditure side, we were focused on two things. One is the infrastructure build-up. We have what's called a build program. And Japan has been very helpful in our build program. We'll have our first subway courtesy of Japan, right? And so because I look at the fiscal performance of the government for 50 years, the infrastructure as a percentage of GDP was only around 2.6%. So we suffer in comparison with our ASEAN neighbors. Our infrastructure was really bad. And so the Duterte administration was committed to spend around 6 to 7% of GDP for infrastructure. And that's the core of our infrastructure program. And so we continue to do that even with the pandemic. We did not cut infrastructure spending, and we will continue to do that. The other important program of the government is investment in human capital. And that's because we have a very young population, median age 24, technologically savvy. Most of them are English speaking. So we said this is our secret weapon, this ace in our sleeves. So in an aging world, young population with the right training and education will be a big boost to the economy. So we invested in infrastructure and human capital. And as a result of the pandemic, we also noticed the need for IT and infrastructure on IT. And that's the third one that we are now investing, because we want to minimize the digital divide, because we really need to make it available to even the lowliest families. So because if you want to do remote education, you can do that without the necessary infrastructure. So those are the three programs that we continue to pursue, and we continue to, of course, do the necessary structural reforms in the economy in order to attract also the foreign investment. The most recent bill that was passed by Congress and approved by the president is the CREATE bill. Here, the corporate income tax was cut from 32% to around 20% over a period of time, from 32 to 25 immediately, and then over a period of time down to 20. But also we rationalized fiscal incentives, because we're losing a lot of money from fiscal incentives. But this has been on the table for the last 3 decades. And the idea is to have incentives that are targeted, performance-based, and time-bound. And this was passed. And for a while, this was added to the uncertainty of foreign investors, because they don't know what the shape of that investment rationalization bill will look like. It's finally approved, and I think with that, we'll be able to attract a lot of foreign investors.
Yes. So the infrastructure development will help micro and small and medium enterprises, which account for the vast majority of Philippine businesses, because the customers, clients use digital technologies, then it's easier for them to go further to e-commerce. And then
Exactly. We really need to focus on the micro, small, and medium enterprises because it accounts for about 99.5% of all enterprises in the Philippines.
Yeah.
And it accounts for about 2/3 of workers in jobs available. And so we really need to focus on that. And as a result of the crisis, we have an extra initiative for them. And that means that we allowed the use of, we allowed banks, the lending of banks to small micro enterprises as a compliance with the reserve requirements. So that's an additional incentive for banks to lend to micro enterprises. And we also have a program with this is funded by JICA, where it's sometimes it's difficult to lend to small enterprises because you do a lot of due diligence work, but you're only dealing with small enterprises. So we have a program where through a predictive model, we can help small enterprises. Banks can lend to small enterprises based on that predictive model. And it's now ongoing. And I think in a year's time, we'll have that predictive model for small enterprises.
I see. And then your population is young. So compared with the Japanese population, they're aging very much. So that's a great advantage.
We're a perfect complement to Japan, actually.
Oh yes, that means to be more complementary. So the kind of international commerce must be strengthened. So and then I hope the digitalization will help Philippine or MSMEs to directly deal with Japanese consumers as well.
That's right.
Then our life in Japan will be also better off.
So your life in Japan will be better off. It's also better off for the Philippines with the complementation. Yes.
And then I expect some of the MSMEs, especially small and medium enterprises in the Philippines, will grow very fast. And then, I hope I can invest directly to them.
Yeah, in fact, that's one of the advantages of one of the things that we have also initiated, that consumers or individuals can directly invest just through digital means, okay, and even in small amounts.
So I think the future for MSMEs are kind of very bright, and so in this sense, this digitalization will really help to achieve the inclusive society. Only if the digital infrastructure and other infrastructures are developed more.
The focus of the infrastructure are really big projects that will link, the lagging regions to the leading regions. It will interconnect the Philippines. As you know, there are 7,100 plus islands in the Philippines.
Yeah.
And our focus will be on mass transit system, just like in Japan. It's more efficient, and it will appeal more to the poor, especially, so they can travel without need for cars, etc. And so mass transit system is the focus of the infrastructure. And again, I mentioned earlier, the Japanese government is helping us do that.
Yeah, great. So great insights, and then very much informative. And now I'd like to invite some of my colleagues at ADBI to ask the governor some questions. The first is Dr. Peter Morgan, the Vice Chair of Research. Peter, over to you.
Thanks very much, Dean Sonobe, and delighted to be able to speak to you, Governor Diokno. So I was quite interested to hear about some of the positive developments, such as the implementation of the national ID and the rollout of the QR codes. I think generally the Philippines does score highly on its programs and strategies to promote financial inclusion, but so far the actual level of financial inclusion seems to be kind of low to average amongst the ASEAN countries. I wonder if you could describe what the main barriers are that are preventing these policies from being implemented more effectively and what can be done about them. For example, you talked about infrastructure. What can the central bank do to encourage investment in internet infrastructure? And also, what is the central bank doing to promote digital literacy, financial literacy, and digital financial literacy? Thanks very much.
Okay, thanks, Peter, for that question. We have actually, to me, the major constraint still is the lack of ID, as you mentioned, because that is one requirement for opening a bank account. So we're doing something about that. We are now in the process of producing the national ID, which will be the only ID in addition to maybe a driver's license and a passport for any individual in the Philippines. So you can throw away all the other IDs. That's what you need in the Philippines. Just a national ID. There's a QR code at the back of the ID. And so that will be also useful. So that's number one constraint. The other constraint, of course, is the lack of infrastructure on the IT. That's the so-called digital divide. And so the internet infrastructure gap is being addressed. For example, the president last March signed Executive Order 127 on expanding the provision of internet services through inclusive access to satellite services. The Executive Order liberalizes access to satellite technology to facilitate an instant, ready-to-deploy internet infrastructure for areas that are currently unserved or underserved by incumbent providers. So I think that will help a lot in this regard. And also, on the financial literacy, the central bank, the BSP, is very active in linking up with all sectors of society, the farmers and the fisher folks, the teachers, for example, the bureaucracy. We have linked up with the Civil Service Commission so that we can give lectures to all civil servants on the right way to save and invest. We also have dealt with the armed forces of the Philippines and the national police. So we deal with almost all sectors of the economy on this fiscal on the literacy requirements. So we hope that because we have just started this, after maybe 6 months, we'll have a more literate society. And with all this digitalization, I think we'll be able to catch up with our neighbors.
Peter, do you have further questions?
No, that's fine for me. Thanks very much.
Okay, so the next is Dr. John Byrne. John, over to you.
Thank you very much. It's a pleasure to be here today. I have a question about the effectiveness of monetary policy in the digital age. So as we know, the effective transmission of monetary policy to the real economy is a core function of the central bank and is an important means by which it can affect financial inclusion. So the question is, to what extent credit provision by the non-bank sector, such as fintech and big tech firms, has on the effectiveness of monetary policy transmission? So on the one hand, it can, of course, reduce financial frictions, but there can also be financial stability risks associated with that due to regulatory arbitrage. So I would wonder what the view is on that and how the central bank finds the right balance between harnessing the benefits of fintech for monetary policy transmission while also minimizing the risks. Thank you.
The regulatory treatment, I mentioned digital banks earlier. The regulatory treatment of digital banks is the same with traditional banks. Now, the impact of monetary policy actions of the BSP should cover not only traditional banks, but also the digital ones as we move forward toward a more financial digitalized economy. Meantime, the BSP's efforts to promote financial digitalization go hand in hand with policies that require enhanced cybersecurity, risk management, and consumer protection among BSP-supervised financial institutions. The BSP recognizes that the success of effort towards financial digitalization lies in part on the ability to gain the trust of financial consumers, which in turn is made possible by a safe cyber environment.
John?
Okay, thank you very much.
Okay, so then the third person is Professor Nemoto. Nemoto Sensei, your turn.
Thank you, Dean. And thank you, Governor Okino. I'm very, very impressed with your speech and your continuing efforts toward digitalization and financial inclusions. My question is a little different angle. It's about the global international talent of Philippines. And you mentioned it's a kind of secret weapon of your country. We know that the Philippines economy has relatively large reliance on overseas remittance, and so far this has been stable, and traditionally it has supported some current account balance, and it has good impact on the economy. But how do you see the trends in the future under the prolonged impact of COVID-19 in other countries? And also I think that could be probably offset by another trend of the export of service industries. I mean, there are many companies in Japan and other countries are trying to outsource their business to the other countries like Philippines. And for instance, my son, he takes a language training courses, and teacher is in Philippines. And he very, very enjoyed his class. I mean, especially under COVID-19. So that's one example, but like to see how do you see this trend? I mean, so the trend of the overseas remittance and some outsourcing businesses.
Okay, thank you for that question, Dr. Naoko. Remittances have been resilient and continues to be a steady, reliable source of foreign exchange for the Philippines, even amid the pandemic. Now, despite the forecast of third-party parties that the remittances will decline by double-digit level, last year, in fact, remittances declined by a mere 0.8%, despite the slowdown in the global economy. So, and for this year, we expect remittances to grow by 4%, and amid prospects of improved labor mobility and better global economic conditions. Now, Filipinos are among the preferred labor across the globe, given their skills, their work ethics, and knowledge of the English language. And human capital is also among the Philippines' key assets in attracting foreign direct investments, given the country's young, dynamic, and educated workforce. Meantime, for example, the business process outsourcing receipts have also been a steady, reliable source of foreign exchange for the Philippines. BPO receipts contracted by a mere 1.3% last year, despite the pandemic. And these are also expected to grow by 4% next year and even higher for the succeeding years. So the preference of many employers for Filipino labor is also a key factor behind the favorable performance of the country's BPO sectors over the years. And to me, the long-term prospect for Filipinos abroad is going to be high, bright, because as I said, we are committed to train them better. We can train them to become nurses, doctors, data specialists, etc. And I think, given what the world needs now, that will just fit into the demand for labor in the years to come.
Thank you very much. Understand well.
Okay. So thank you very much for them. I'd like to move to the audience Q&A session. So already we have been receiving a lot of questions, and then but the audience viewers, please write your question in Q&A box. Then my colleagues are reading, although I cannot read because of my farsightedness prevent me from reading very small letters on the screen, but my assistants are helping. So please write more. And then let me pick up one question first. This is a question from Nash Reginio. The question is, as discussed, the pandemic did not stop the build program from being implemented. How is this likely to surge the debt of the country?
All right. Well, we're lucky that for the past 2 decades we've been undertaking reforms, and so that at the time of the crisis, our debt to GDP ratio was in the neighborhood of 39.6%, lower than 40%. So we have a lot of fiscal space to incur more debt, and luckily, because of that low debt to GDP ratio, we're able to raise a lot of resources to finance our needs during this pandemic. And so I think, given our new borrowings, the debt to GDP ratio will hit something like 55%, and so that's still much lower than the received doctrine, which says 60% is the cutoff. So we're comfortable with where we are right now, and also we look at our debt, and it's mostly long term, and the country's external debt as a percent of GDP is only around 27.2%.
Yes, compared with Japan's huge government debt, so if anything will be okay.
That's right. That's right. But that is also true for many developed countries, including many European countries, as a result of the global financial crisis. They're still heavily in debt.
Mm-hmm. Yeah, so because governor has rich experiences in both public finance and central banking, so I really want to know from your point of view, so how does Japan's huge government debt look?
But I understand most of your debt are internal anyway, right? So as long as the Japanese people continue to be savers, that's fine, I think. That there's no threat to instability.
Yeah, so maybe same will apply to the Philippines if the nature of debt is similar.
Correct. Plus, we're not really heavily indebted from foreign sources, and right now, for example, I've seen this in many crises in the past, like in the Asian financial crisis and the global financial crisis. Whenever we have a crisis in the Philippines, we run out of dollars to service our foreign debt. And so sometimes, because we want to reduce the outflow of dollars, we have to raise interest rates, domestic interest rates. But that's no longer the case. In this instance, right now, our gross international reserves is hefty. It's equivalent to 1 year's worth of imports. And the received doctrine is 3 months worth of imports is enough, sufficient. So we have a hefty gross international reserves. So there's the peso is not depreciating. In fact, it's appreciating. And we don't have to raise interest rates. In fact, we cut interest rates by 200 basis points. It's now down to 2%. So this crisis is different, much different. To me, it looks like basically it's a health crisis that we need to address, how to control the virus impact on the economy.
Thank you very much for your insight. And now back to digitalization. Well, this is a question about digital money from the Lee Chiponjian. I'm sorry for my poor pronunciation. So the question is 5 only digital bank a long-term limit on the number of digital banks? Or do you see BSP adjusting that limit to more? And when will you lift that limit to the number of digital banks in the Philippines? What indicators will you be looking at to help in your assessment?
Well, as I mentioned, we recently issued the guidelines on the establishment of digital banks in the Philippines. And in fact, last March, we have approved the first digital banking license to Overseas Filipino Bank, which is a subsidiary bank of the Land Bank of the Philippines, which is a national government bank. So at the moment, our policy is to maybe consider among the applicants the top 5 banks that we are willing to consider. And depending on our experience, we may expand the number of digital banks. So we want to go slow on this, but we are not committed to just 5 digital banks in the Philippines. We can have more if there's a huge demand for it.
Thank you. And then this is a question about inclusion from Na Bahadur Kartiwara. As you have explained that you have a target of at least 75% of population to have a bank account and embrace digitalization, remote banking access. However, the majority of the rural population or marginalized society do not have adequate knowledge to perform remote digital banking service. What are the different approaches you are considering to cater the marginalized society to learn and follow the digital banking and be the driver of change? This kind of question.
Our target is 70% of Filipino adults will be onboarded in the formal financial system. Right now, we are maybe in the neighborhood of 29% already onboarded as a result of this global financial crisis. Okay, many Filipinos have actually gotten a financial account as a result of the global financial crisis, or rather the pandemic. We, of course, with the digitalization and with the other digital forms that I explained earlier, like the QR code, and the more extensive use of our own payment system, like like the InstaPay and PesoNet. Then we will, plus our assistance to the medium, small, medium enterprises, that will actually expand the use of the financial system services in the countryside. And with the additional infrastructure that I was talking about, the IT infrastructure, that will allow the banks to reach more people in the countryside.
I see. And then the question from Reynaldo Chan. Thank you for the update, Dr. Diokno. Digitalization requires a strong and sound national IT broadband backbone, not only to facilitate payment and settlement, but also in managing risks, especially in an this is I cannot read here, but is the Philippine government still planning to pursue a national broadband infrastructure similar to what was initially planned a decade ago?
Could you say the last sentence? I didn't get it.
Yeah, is the Philippine government still planning to pursue a national broadband infrastructure similar to what was initially planned a decade ago?
Well, there are two major players right now on IT infrastructure in the Philippines. One is Globe, the other is Smart. There's a third one coming, so that will increase the number of players in the Philippines. But also, in addition to the executive order I mentioned earlier, which would allow wider use of the digital platform in the countryside, we also support the passage of an open access in data transmission bill. There is a bill right now pending in Congress, and this bill seeks to liberalize the ICT industry by, among others, lowering barriers to entry and simplifying the licensing process for broadband network providers. This was at the initiative of the Financial Inclusion Steering Committee, which endorsed the bill as a priority to the Senate and the House. So we are optimistic that with the passage of this bill, the digital divide will no longer be an issue in the Philippines.
I see. And then the question about national ID system from the Justin Buster. What is the timetable for the full rollout of the national ID system? And what is the current status?
Well, the gathering of data is done by the Philippine Statistical Authority, and that's ongoing. The printing is also ongoing at the BSP. And so, as I mentioned earlier, our target is to print some 50 to 70 million IDs this year. And so it's now ongoing, and people can expect to get their ID. And at the same time, you know, we tie up with the Land Bank of the Philippines that as the IDs being processed, they are going to have these individuals issued a separate bank account so that we can get our objective of having 70% of our adult population having a transaction account earlier than 2023. Okay.
I see. Now the more and more questions are coming. Then my assistant is suggesting. Okay, so the question from again sorry, this is not the one. Okay, so this is a question from Lawrence Akawili. quite difficult to pronounce for me. The national capital regions and the nearby provinces were placed under stricter lockdown since March 29 amid the resurgence of COVID-19 infections. Do you still expect GDP to contract in the second quarter due to the mobility restrictions?
That's all right. The original target for this year under the national government target is to grow by 6.5 to 7.5% after a decline of 9.6% last year. I think with a two-week, with the recent lockdown, this is my own guess, okay? The economy will probably grow by 6 to 7%. So there will be a 0.5% decline as a result of the additional lockdown.
So then it's a question from Antonio Avila. Due to the COVID pandemic, there was a surge in the demand for online platform, but the problem is the high cost of using the internet. What is the government doing to reduce the cost as well as to improve the internet speed?
Well, to me, that's a short-term problem. So because you cannot put up infrastructure facilities in 1 month or 2 months, right? So, but we are addressing that problem. We recognize that there's a strong need for investing in infrastructure facilities if we want to move forward with our digitalization effort. And so, as I mentioned earlier, the president issued an EO, and then we are also endorsing another bill to Congress so that this will improve the infrastructure status of the Philippines. And
Let's see. Well, this is a different angle. So the question from Susan Rojas. A goal of government is to increase exports of human capital, meaning OFWs, etc. And do you think exporting human capital to maintain a source of remittance, forex, is a sustainable long-term solution to the country's economic stability?
well, I think you have to have an appreciation of the importance of rather labor mobility, right? It's not only goods mobility, but labor mobility. If, for example, to me, our objective should be to increase the quality, not necessarily the quantity of labor exports, but we can export more skilled workers like doctors and nurses and medical technologies, data scientists. That would be good for the Philippines. Okay.
So, yeah, this is a question a bit redundant, but yeah, question from Christian Roland. The Philippine banks will undergo soon stress testing, and we take note that capital and the solvency levels are above required threshold. Will the stress testing exercise perhaps include policy steering or nudging from the BSP on risk-taking towards areas like SME, connectivity infrastructure, and agri-value chain financing, while being mindful of the financial stability mandate?
Well, we've been doing the stress testing ever since, and at the height of the crisis, even now, we continue to do this stress testing. The Philippine banks are strong and steady, and for example, the NPL right now, non-performing loans, is in the neighborhood of 3%, right? 3.1%. That is much lower than what we had during the Asian financial crisis, which reached a level of close to 20%. And that is because we learned our lessons from the Asian financial crisis. The central bank has issued many policies and to increase for example, the capitalization requirement. Our capital adequacy ratio is in the neighborhood of 16 to 17%. That is higher than, much higher than the regulator's requirement of 10%, and even higher than the 8% standard by the banks for international settlement. So the Philippine banks right now are really prepared for this crisis. And we passed a law recently. This will allow banks to unload some of their non-performing loans to an asset management corporation. And we gave the asset management the transactions from the banks to the asset management corporation some fiscal incentives, tax incentives to make this to make it very attractive. You know, during the Asian financial crisis, it took the government 5 years to set up this asset management corporation. Now we have already set it up, and I see this as a fallback position, just in case there's a need. So there is already an apparatus available for some banks to upload their non-performing loans to improve their bank position. So we're ready. We're ready.
Okay. So not many, but few people are asking the questions about exchange rate and those things. So could you, okay, so give us a kind of idea about the market sentiment on the Philippines, the performance of Peso and Philippine bonds, and also credit ratings.
Well, you mentioned credit ratings. In a sea of downgrades globally, the rating agencies have affirmed the ratings of the Philippines, investment grade. So that's number one. In fact, I think one of the Japanese rating agency, in fact, upgraded us immediately before the crisis. So there's no problem with investor confidence on the Philippine economy. Now on the what's the second part? What's the first part of your question?
The performance of Peso.
On the peso. All right. We follow the a flexible exchange rate. We do not intervene in the market except to smoothen the fluctuations. And so right now, the Philippine peso is strong. It's been appreciating slightly vis-a-vis the US dollar. And as I said, this is because, number one, because of our hefty gross international reserves, which is right now around 104.5 billion US dollars. Okay, we expect this to be up to 120 billion by the end of the year. Number two, because of the steady inflow of overseas Filipino remittances, we receive on average around 30 billion US dollars, 30 billion US dollars, plus the BPO, the business process outsourcing. That's also a steady stream of dollars to the Philippines, and of course the foreign direct investment. So with all this, I think there's no threat that that there will be a sharp devaluation or depreciation of the currency.
Here is a question from a friend of mine in Central Asia, Dr. Iskandar Abdullayev of the Karek Institute. So question is, what is major risk or potential problem for your economy if pandemic will continue further in 2021? A very broad question.
Well, to me, the major risk will be that the virus itself. Right now, it's I would say it's under control. We have the vaccines ready, and we expect to get the necessary vaccines. In fact, we plan to vaccinate some 70 million Filipinos this year. And we're confident that that's doable given the commitment now that we have gotten from the suppliers. So, so the risk is if there's a resurgence of the virus, because that to me is the real problem. So because if we are able to control the virus, confidence will come back, consumer spending will come back, investor confidence will come back, and they will invest, and so forth and so on. So it's really the COVID-19 virus, which is the risk.
Nice. Oh, so it's already 1 o'clock in Japanese time. So time flies at the supersonic speed. So yeah, it's pity that we have to close this very nice dialogue, but it's impossible for me to wrap up because I've sold so many and so important insights from the governor. Very much insightful, very much informative. So thank you very much, Governor, and then we sincerely hope that you will maintain your health to fight against all the bad things during the COVID time, and then save your country. And then also we really hope to have a further dialogue in the future with you.
Okay, thanks, Dean, for having me, and keep safe and well too.
Thank you very much.
Bye-bye.
Thank you very much, everyone. Bye-bye.